Patrick, it's good to see you. I assume the reason why San Francisco is at the highest ever, even though oil is not, is because of taxes?
Yeah, that's essentially it, Kelly. California's unique blend of gasoline combined with the nation's highest taxes and, of course, a cap and trade or carbon management program, all boosting prices in California. San Francisco is the number one. Los Angeles is going to follow, just a penny behind them. And the statewide average in California will be third. That will probably happen in the next 72 hours.
$3.72 is now the U.S. national average. That is also a record high, is it not?
It's the highest now since 2013, but very quickly we're going back all the way back to 2008. That's when the nation hit the all-time record of $4.10 a gallon. It appears that record could fall as soon as the end of March as well.
Right. I'm sorry, I should restate, not the highest on record, but the highest since 2008. So repeat what you just said there, that the previous high, remind us what that level was and when you think we could surpass it.
Yeah, that previous high was $4.10 a gallon. The national average hit that in July of 2008. And I think we're on the road. $3.75 here probably by the end of the day, $3.90 in a week, $4 by March 24, and potentially the $4.10 a gallon mark by April Fool's Day.
Where does it stop, and what will the effect be on the U.S. economy of gas prices this high at a time when other prices are similarly high?
Well, Tyler, we just revised our 2022 outlook that now calls for Americans to spend over $500 billion on gasoline this year. That's up $84 billion from our forecast that we released in December. Of course, the big difference now, the higher price of oil, the likelihood that the Russia war on Ukraine will likely drag on.
So, Patrick, I think the important thing to note here as well is that the levels you've described are already set into motion. So if we see crude reversing today below 109, you're saying we're still headed to, are we still headed to $4? What's the level we should watch to say, hey, maybe we can avoid that outcome?
Well, I think $4 is here. I think with the transition to summer gasoline, the calculus is a little bit different. We'd probably need oil prices to hold above 105 for us to get there. And of course, highlighting the uncertainty that does lie ahead. If there is a development in the Russia situation, we could still avoid that $4 a gallon mark. But it just really appears with RBOB's incredible rally here over the last week. I mean, even if there is a nuclear deal with Iran, I think the market may pull back a little bit, but that could just be a head fake as we move higher, as the fallout from Russia's oil production or lack thereof is likely to continue impacting us as we head to the peak of summer driving season.
Shepard Smith here. Thanks for watching CNBC on YouTube.